Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, good afternoon to you. Thank you so much for joining us, making us part of your day. Welcome into Market Talk for this Wednesday, October 27th. I'm your host, Jesse Allen. Thank you so much for being here with us as we work through the middle of this final week of October. Find us online, markettalkag.com. That's our home on the web. You can find all of our streaming sources there, social media, and much more. It's all online, markettalkag.com. We got plenty to talk about today. Let's not waste any more time. Let's bring in our good friend Mike Zuzolo with Global Commodity Analytics. Mike, good afternoon to you, sir. Happy Wednesday. And we had some green on the screen today.
Yeah, I think this is 2 weeks in a row, Jesse. We better be careful. The trends are working against us now.
Well, hopefully maybe the trend is just changing for the better for us here on a Wednesday. That corn market, finally. We found some buying in that corn market, and I think pretty key today, that December contract closed above 550 pretty substantially, 557 at a quarter today. So I think that was a very positive thing to see, Mike.
Yeah, I agree. And that 52-week moving average was taken out as well, just underneath 550. And that's going to be an important number as we go to Friday's close, I think. I've been in the mindset the last 5 or 6 days since we talked last that this market has been real difficult in terms of the corn not really wanting to get up and go with the soybeans or get up and go with the wheat, that it's just kind of been languishing there. And I think this is where we finally found a reason for the markets to find corn as no longer being the short side of a spread, whether it's buying beans and selling corn or buying wheat and selling corn. And several things I think led to this both earlier in the week, but I think today, especially on Wednesday midweek, weekly energy stocks data day, that was the big deal, was the data dump. The crude oil stocks built substantially larger than the trade was expecting. That really impacted negatively the soybean oil market, in my opinion. But then the converse was the unleaded gas stocks dropped down to their lowest levels since, I want to say, early or the end of November of 2017. So we have the tightest stocks of unleaded gasoline going back to almost 4 years exactly at the time of the end of October into November. But yet we saw the ethanol production number come up to the second largest ever and got just within, I think, 2,000 gallons a day of its major highs from back in that same time period of 2017. So I think this is where you notice the corn found some support and it became no longer the short-sided spreads. I think it was actually bought. I'll throw one other thing out there that's not as obvious and maybe a little bit more opaque. I've noticed, Jesse, that the fertilizer issue that we've been talking about is finally starting to work in this market. And what I mean by that is natural gas and corn, their price correlation over the last 3 or 4 weeks or 8 or 10 weeks, however you want to measure it, 3 or 4 months, or last 8 or 10 weeks, however you want to measure it, it's gone from sharply negative to sharply positive. And today, I think that when we saw the natural gas up over 5%, that also attracted some corn buying because that correlation is so positive. And so money, I think, is flowing into corn as a result of the natural gas not backing down and those spot prices staying strong because of expectations for a cold winter, very low supplies. Russia's still playing their games with Nord Stream 2 in Europe and Moldavia. These things, I think, are all finally starting to work into corn.
Well, and you answered what was going to be my next question, actually. We look at ethanol and the rise there, and you mentioned the fertilizer prices. And I was going to say, and ask, it feels like that we're finally catching up with these worries about fertilizer prices and shortages and availability in this corn market. And just the thought that, next year we might not plant as many corn acres, we might plant more bean acres. And you go over to soybeans, it feels like that kind of correlates with, obviously, the crude oil, the drop there today affected bean oil, which has been a driver in the soy market, but also maybe just the fact that the trade is starting to realize that we might have more soybean acres than we really want or need going into 22, Mike.
Yeah, and this is one of the things that happened earlier in the week that I was kind of referencing. I'm glad you brought this up because we had some data come out and some forecasting numbers from IMEA, kind of the state agriculture area in part of Brazil, especially in Paraná, Brazil. And if I look at that data, and after talking to my friend and colleague down in South America this past week, just a day or so ago, it would seem to me that Brazil has sufficient fertilizer needs booked and in-house in country for their soybeans, but they are still very nervous about their safrinha corn, their second crop corn that they will plant in about 3 to 4.5 months from now. And that's the majority of the Brazilian corn crop. And Mato Grosso and Paraná are going to be the two areas to really watch here as we go into the wintertime months to see if they can get those fertilizer needs that are booked. Will they get the physicals? And I think that's a real issue still. IMEA made that point of the corn versus soybeans securing of needs. And my South American colleague did as well, saying that producers are very nervous at this point about getting enough fertilizer. So, what I'm leaning towards at this point, Jesse, is that we will not meet the needs for the second crop Brazilian corn crop, nor the United States corn crop. And so while the acreage will be down, it will really be about the national yield, especially in Brazil. My South American colleague is leaning towards the idea that Brazilian farmers will still plant the corn. They just won't get anything close to the yields that they've been used to because of the lack of fertilizer. So it's a very nuanced situation right now. I'm very glad that it's working into the price. And just to kind of finish up on your soybean question, I do think soybeans can follow the corn and wheat higher, but I think corn and wheat have to go to higher together. And I think a lot depends on what you just brought up, that meal oil spread. I like it when meal leads. I like the fact that the meal chart has broken out, as we had been talking about the past few weeks ago. We're above a key trend line resistance in the weekly chart. We're testing a major resistance in the monthly chart. So if we can finish this week out, the end of October, above that trend line, we may have a scenario where the beans go higher with corn and wheat just because the meal is underneath us as well.
Mike, let's stay on quarter beans here real quick. I know we got some charts to look at today, and I know this is the new crop bean corn ratio. Why don't you walk us through this and explain some of the things you're seeing here?
Yeah, this is kind of a chart that really shows a backbone in a marketplace in terms of investor sentiment. And if you look at the first half of the chart, the first left-hand side to the middle of the chart, you notice the bean corn 22 ratio could not get above 2.4. And then all of a sudden in November, December of last year, it just skyrocketed above the 2.4. This was your China buying. This was the South American crop problems. And all of a sudden you had the phase one trade deal working in your favor. We were not able to go below that 2.4 level, even after we tested it in May of this current year. We still could not go below it until just in October. So what this chart kind of says to me, Jesse, if you just cut it in half, is that you spent half your time below 2.4, half your time above 2.4. Both of those time periods are, roughly speaking, a year long. So I would not be surprised if that new crop bean corn ratio stayed below 2.40 for almost a whole year. And I think this is where that's point number one. Point number two would be going down to 2.28 on that ratio takes you down to the lowest levels in a year, and you are seriously trying to buy corn acres at this point.
Let's segue over to wheat, and I'll pull up the cash wheat index as well. And you look at this wheat market; it felt like a follower today. I know since we last talked, spring wheat has really shot out of a cannon, well over $10, and then we saw a big sell-off yesterday in spring wheat there after we reached some new highs. Talk about this wheat market, and I know you have some concerns here, so why don't we go through those, Mike?
Yeah, really good point about the flatness of this market. And this chart, I think, really shows you the protein-led market. I mean, the spring wheat is in control, period. And that once the spring wheat tops, the other two will do as well, in my opinion. Now, having said that, if we would stay dry in hard red wheat country, which that's going to be determined in the next 10 days, I think, as far as what the market is anticipating, if we stay dry in the hard red wheat, that purple index, we could see it try and play more of a catch up to that spring wheat index, if you ask me, Jesse. And this goes back to that flatness that you're talking about. Two things really have trapped the bull or corralled the bull this week. One was the export inspections of a measly 5 million bushels. This was followed up today by Egypt buying once again Ukrainian, Romanian, and even Russian wheat. I would have thought Russia would be out of the market at this point, given their smaller crop and given their export tax, but they just keep pounding and getting more business from us. So the demand side's weaker, and now we've got the weather coming in. The market's starting to think that Kansas and Oklahoma are going to get a really good dose of rain, and they're also thinking that the Argentine Pampas region is going to get a good dose of rain. Both of those coming within the next 7 days. So a week from today, when you and I talk, we may be talking, yeah, it's probably a confirmed top in the weed as far as the weather and the supply goes, or we don't know how bad the conditions are going to get in the next crop report by USDA on Monday afternoon, because we've missed a bunch of rains in the hard red wheat belt, and we're very, very cold now. So it could go either way at this point, but I think it's laid out pretty securely. Weather, export inspections have really nipped us from the wheat being able to be the leader to the upside this week.
Mike, I want to give some time to talk about the outside markets as well here before we go to livestock. I know everyone keeps talking about inflation and et cetera, and just looking at the dollar, looking at new record highs, the Dow, S&P, et cetera. Wall Street, good earnings reports. What are your thoughts on the outside markets? Where we're at here as we're nearing the end of the month of October?
Yeah, I think Wall Street was able to make new highs this week because the Biden tax plan, as it was going after more of a unrealized capital gains mindset, is not going to negate or make a negative situation. It doesn't look like, anyway, Jesse, when it comes to divestment from Wall Street and pulling out of the stock market before the law takes effect. I think that was a real concern by those on Wall Street, and that helped plow more money back into the market that had probably been taken out, and quite a bit of money had been put on the sidelines in the form of cash. And I think that money's coming back and going back to work in Wall Street. We've noticed also the bond yields have flattened out. They're not as strong at this point. That gives the Wall Streeters more juice to go in and buy the already tragically high prices of stocks, as you say, at record levels. So that's one thing. I think the thing for me in the inflation aspect of it, and trying to be real brief here, we are probably in a window here where the end users are going to buy extra because their inflation expectations are that the supply chain's broken, and it's going to be broken long enough. It's not going to bring prices down. The labor market's getting worse, especially around the vaccine issue, and also around the wage issue of getting enough people, enough money, that people are just leaving the workforce. And that showed up glaringly last month. So between those two things, inflation's not going anywhere. And I think that is going to allow the market to come back in and position themselves with a little bit heavier commodity demand or commodity investment demand to get them through the first quarter of 2022. But as we do this, we're going to ration demand. We're going to ration real demand. And we could go into a global recession, especially if the energy prices continue to go higher into the early winter. I mean, $100 crude oil can wreck a lot of emerging markets at this point, and I think that's what I'm really worried about. So get it while you can. I think that was kind of our message last week. I would stay on that but it's going to be very hard to know when they've bought enough to extend their needs out. And when you see maybe demand peter out in 2 or 3 or 4 months, you're going to be like, well, what's going on? What's going on? Well, they probably bought ahead, and that's probably what I'm going to be looking at most.
Another issue I think that is out there as well is farmers, look at their marketing overall. They're looking at grains or livestock, whatever the case may be. They're looking out to 2022, trying to get some profit on the books. They're maybe worried about the tax situation as well. I know that's also part of, you mentioned the Biden plan. I think that's something that farmers are starting to take a little bit of a closer look at here as we near the end of the year. Tax season's coming up, and also just wondering, what's going to happen, as we move forward, Mike.
Yes, I think that's exactly right. The key is, the term tax shelter is not a bad word. It is a word of being understanding how the tax system works, how the tax code works. Well, we don't know what the shelters are going to be at this point because this bill is going to be so big in terms of dealing exactly with that. So probably one of the biggest. Now, what I've heard so far this week, the latest is that most of the Trump tax policies will stay in this bill. And if that's the case, it's probably going to be mostly good for agriculture.
Mike, let's talk livestock. As we look at those markets here, live cattle moved higher. Hogs were lower here today. More continued pressure there. I know feedlot country, we got some real good cash trade in today, a couple bucks higher. And I know we got the cattle hog spread here as well. This chart, I'll pull it up. Let's talk about livestock. What are you seeing there today?
Yeah, I think you're right. The cattle market is really coming around this week. It's nice to see because seasonally it's supposed to do that. And we've got boxed beef prices finding some support as well, Jesse. That tends to mean that you're getting your retail demand met. And as I said, that seasonal seems to be very, very favorable this time of year. And it's nice to see this. Having said that, I feel like cattle and corn are very similar to one another, whereas the corn has the soybeans maybe weighing on it here in the short term because of the spread price action, or will be in the not too distant future. I think cattle also have the hogs leaning on them and weighing on them, because we've noticed this cattle hog future spread. We've been able to get cattle up to $55 premium to the hogs as October cattle gets ready to go off the board and December takes over as lead month futures. That's going to jump, and it's going to probably jump above that green line that's been in place ever since 2015. So you're going to probably see a breakout in this cattle hog spread, but I'm wondering whether it's not going to be a situation where it doesn't last very long, and that the hogs better come around and support the cattle as we get into November, or we're going to find a lot more pork buying, pork featuring, pork retail demand than we will on the beef side. So this is where I think cattle is probably getting hemmed in. I would say the same thing about feeder cattle right now, is that you've got the October feeder cattle getting ready to go off the board. It's right there with the cash index. But as the November takes over in the feeder futures, it's got a premium in it of a couple $3. So feeders need to perform here in the cash market and need to have good demand. Last thing I'll say is, since we talked last, we had the cattle on feed report. I think those placements numbers really help the feeders underneath them, whereas the marketing's number coming in at 97%, that was not a good number for me. Even though it met the trade objectives, I felt like it was still too weak. So I would say the feeders are probably going to be a little bit more supported versus the fat cattle, especially if the hogs can't come in here and find a base of support. And on that note, it looks to me like the weekly hog chart is looking like it's trying to form a bottom. So I'll have more on that next week.
Mike, a lot of stuff we covered today, a lot of great analysis. Any other final thoughts? We got a little bit of time left. Anything else you want to share with us today?
No, I just want people to go and get a trial at globalcomresearch.com if they would, Jesse. I think it's really worth it. I think they get a lot of great information. It's not too big of information. I try and slice it up pretty nicely, so it takes no more than like 15 or 20 minutes to read or watch your video. And I usually add some slides to your video that I don't show on your video podcast. So I think it's worth it. Just go to globalcomresearch.com, try it out for a couple of weeks and see what you think.
Find it all, globalcomresearch.com. We appreciate the time as always. Mike Zuzolo, thanks for joining us here on this Wednesday. We will talk to you next week, and it'll be the month of November, sir.
It will be. Have a great end of the week there, Jesse.
Thank you. Mike Zuzolo, Global Commodity Analytics, joining us here today on Market Talk for this Wednesday, October 27th. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great afternoon.